So MMEX Resources Corp has completed its reverse split. So the stock is now trading at whole numbers, currently closed at $2.34 for the session of the 7th of July 2021. And we didn't have a lot of we didn't have a huge amount of shares in the stock, so eventually we only got one out of the current stock. So, and how did you fare? How did you fare in that reverse split? Did you feel that you lost all that you invested in the stock? I mean, if you go by what is it's currently valued at right now, I mean, what your position is currently valued at right now, do you think you have run into a loss? Because what we are looking at right now is that since this reverse split was completed, the stock, well, all in all, it has always been retracing for several months or weeks. It has been very much bearish. So this reversal will definitely reflect that very much as well. But the good thing is that it currently now has 3.252 million shares. So that's a positive, because it's a positive and a negative as well, because you know that with a small float you will have high volatility, very high volatility, especially when demand comes in. So, but in any case though, a lot of people, I believe, will feel that they have really lost out in MMX. And going down, we can see the signals are very, very, very much bearish, very bearish. The unbalanced volume indicator is trending lower. Okay, you can see that. So, but before we get into that, we have this news. This is as far back as I think the 25th or 30th of June, and this concerns. It says here, entry into a material definitive agreement, and it says they previously reported on the 5th of March 2021 that they finalized an agreement with GS Capital Partners LLC to extend credit to them pursuant to a note agreement that provided for future mutually agreed drawdowns of a maximum of $750,000. The note, which bears interest at the rate of 10% per annum, is due on the earlier of the 31st of December 2021, or their consummation of an equity or equity-based financing sufficient to retire such outstanding notes. On June 22nd, 2021, they completed a 200,000 drawdown under this note agreement. So these are some of the things you have to bear in mind. The stock will continue to dilute and do all sorts of things. The due diligence that has been done on this stock, based on, or rather the experience of the market participants who have been involved with this stock, is that it is still the same old cycle of pursuing projects and stuff like that. So you have to know that this company is still in the concept or development stage, so there is a lot of risk involved in trading MMX. There is a lot of risk, and there's a lot of skepticism towards the people who are running the company and all that stuff. And I'm not saying that I don't know them, but this is what people have been saying. I'm just reporting it. So, but we have a position there regardless. We had more than one share, as you can see. We had more than that because of the reversal stock split. We only got one because we didn't have a huge amount of volume. So you can imagine I can't remember what the volume was. If you watch our previous videos concerning the stock, you probably get a hint of what the previous outstanding value was. So you can see what's only left now, only 3.52 million shares. So a lot of people would have had a huge shaving off, a huge haircut, to the number of shares outstanding they have. So but in any case, as we pointed out, the signals are completely bearish. Every metric, every oscillator, every indicator, they're all pointing to a bearish state. So it's definitely, it appears to be in a bearish medium term. It is a bearish medium term trend within a longer term uptrend. Okay, let's see whether we are looking at the same thing, whether we have the same thing. Okay, that 200-day moving average is still very much bullish, because the slope is the slope, the curve is still very much inclined upwards, but all the other moving averages are very much sloping downwards. The 200-day is sloping upwards, and the other ones are sloping downwards. So the 200-day, which is the longer term, is why it is saying here that the longer term, it's saying here it is bearish. It is in a bearish medium term trend within a longer term uptrend. So that's why it's saying that. So in the medium term, you can just lump up the 10-day, the 20-day, and the 50-day moving average. The 50-day moving average, which is the longer of the three of those averages. You can, if you like, encompass all of them together. So in the medium term, in the medium term, the signal is a bearish one, but in the longer term, the signal is still very much an uptrend. Okay, the 200-day moving average is still rising. You can see that. The MACD is bearish. It's also lagging the S&P 500 easily, and all these other ones will indicate bearishness. Momentum is strongly bearish. The 14-period slow stochastic escalator is below 20, the level which many analysts call oversold. The unbalanced zone indicator is bearish. The slope of that indicator is negative and suggests that there is a lack of buying interest. But even at that, it still has a 10-day volatility of 675.6%. The RSI is currently at 28.93. So, but in any case, let's see what the stock was like before the market closed. So from we can see this is just a few hours before the market closed. A lot of scalping is going on, or does go on. You can see here it rose from $2.14 up to 2.3. So this is likely to be, there's a good chance it just happened abruptly and also retraced abruptly as well. So these are very very sharp transactions. Some of them may be short transactions. May or may not be. It's still very much trading on the pink sheets at the moment, even though it has because of the reversal, it's now trading in whole numbers. So, but what is certain is that it's probably presenting a certain trading opportunity for certain market participants. And let's have a look and see what the 5-minute model looks like. Okay, so still very much sideways movement for the 5-minute model, but at some point it's reached 2.341, which is the highest at okay, not the highest in that session. The highest in that session was at roughly $2.97. I mean, it's not the highest of that session, as a matter of fact. It's just as at what was that? Yeah, I think let's see whether we can get a bigger picture of the whole session. So this was the okay, we're not getting that very well. So let's see whether we can narrow it down to the 7th of July. So this is the 7th of July. This is what happened, pretty much what happened. So at some point it was trading at 2.36. This is just the 5-minute model. So yeah, it's pretty much traded within a certain range for that session. So let's look at a 10-minute model. I don't know if it's going to help at all. Not really. So let's just go into go and see what the 10-day, what the daily model is saying. Okay, the daily model, okay, that's saying there's a value of $4, which all of these are just um, when you convert everything, because of the reversal, but this is the value you have. So in any case, though, based on the daily model, it's indicating that it is still trading above its all of its moving averages based on the daily model. Let's see whether we are looking at the right thing here as well, because we don't have that here on the website. This is obviously Charles Schwab. But on the daily model, we're not seeing that. We're seeing a stock that's trading below all of its moving averages. So unless we are not, there's something we haven't implemented very well here. This is the 30th of. Let's bring it all the way down. Well, for some reason, it's indicating that the stock is still very much trading above all of its moving averages. That is quite strange. That's quite strange. But I know the stock is of great interest to a lot of market participants who watch this channel, who watch the videos on this channel. But in any case, what is certain is that it closed below all of its moving averages for that session of the 7th of July, and momentum was also flat, quite poor. But the MACD for some reason still above the signal line for some reason. But all in all, just do your maths concerning MMX. Know the risks involved. There's a good chance that there will continue the cycle of dilutions, fundraising, credits, and all that stuff. That will continue to occur. There's a good chance we will continue to occur. But I haven't done any due diligence. I have not looked at the financials to see whether they're actually making money or not and all that stuff. But in the world of today, the way stocks are being traded at the moment, it's not solely or significantly about the financials or even the fundamentals. If you have people who come in and publicly declare that they are shorting MMX, there's a good chance the reverse will be the case, because all of those short stances and all of those short interests indicates the consequential outcome of them is that it will make the stock bullish. The stock becomes very much bullish. So, but when you don't have indeed, there is a lot of skepticism towards MMX. Easily, there's skepticism towards it. So, in the coming sessions, if it becomes prominent, there's a good chance it will rally. But it will just simply trade on those skeptical sentiments, skeptical stances. That is what it will trade on. It wouldn't really trade on any fundamentals. The fundamentals are not sound. The company really doesn't have that sort of reputation. So if you're going to be in MMX, be in it because of the opportunity of a possible rally, because of what's going on right now, because of the social media influence and all that stuff. But at the same time, again, I know some of these folks on the pushing meme stocks are not just doing that because they want to push any random company up and all that stuff. They really get involved where there is a prominent or a significant amount of shots going against the company. So by doing so, when you short the stock, you lock money up in the stock. So even though they are also kicking against them to some extent morally, at the same time as well, financially, the opportunity is there. So you can also notice that the ticker has changed from MMX to MMXD. So you find out in the title of the video and all that stuff. So be careful, know what you're doing with MMX. Technically, it looks like a buying opportunity. It's trading below all of its moving averages, even though this model is not exactly indicating that. Let's see this model. This is all of these tools are from Charles Schwab, the Street Smart Edge. The daily model is indicating that the stock is very much bullish. So just be careful, know what you're doing with MMX, and let's see how things pan out. Okay. Would I call it a buy? We already have a position there. If you're going to buy MMX, it is a highly risky stock. There's a good chance it will even continue to retrace again. So if you're going to do so, just do so with sums of money you can always afford to lose. So let's see how things go. Thank you very much for watching this video.